The last market report we did for May showed that while the seller's market persisted due to record high pricing, contract activity was still declining monthly. May's annual contract activity only showed positive gains in the amount of closed transactions, whereas annual pending stats showcased negative gains. Will the median sales price stagnate or maybe even lower in the midst of declining contract activity? Will contract activity continue to decline? Stay tuned for June's market report. Quick disclaimer, there are other agents doing market reports for Las Vegas. You might see different stats in the categories discussed in this video. Agents across Las Vegas have different sources and those sources might have different data. For transparency's sake, I will link all the sources I have used personally to create this video market report in the description below. First up is the median sales price. June clocked in at $400,000, which is a $5,000 increase over May. Year over year, the increase has been marked at a remarkable $75,000, a record high for annual numbers. These stats show that the month-to-month appreciation has slowed slightly, but the annual appreciation continues to reach record highs. Will these spectacular annual gains continue for the rest of the year? Now we go to inventory in the Las Vegas Valley. June shows up at 6,158 units, an increase of 5,981 units in May. June of 2021 displayed 7,858 units being available, which is a significant decrease on 1,700 units year over year. While inventory still pales in comparison to last year, the month-to-month inventory has increased, the first time in an extremely long time. While the problem with low inventory won't be solved just by adding 177 more units to the market, it is a significant reversal of a major trend. We now cover pending transactions, where a seller accepts a buyer offer and the transaction goes into escrow. June sits at 48,280 units being under contract, marking a decrease of 1,241 less units being under contract compared to May. June of last year had 50,878 units under contract, which marks a decrease of 2,598 less buyers getting their offers accepted. We go from pending to the final stage of an escrow, which is closed transactions. Simply put, these are the amount of home transactions that finish escrow and transfer home ownership to the buyer. June clocks in at 49,464 units closing, marking a decrease of 1,190 units when compared to May. June of 2021 sat at 50,696 closed units, showing a decrease of 1,229 units closing year over year. June's annual stat decrease is noteworthy due to the fact that May's annual stat showcased an increase in transactions closing. We now go to our final stat, which is median days on market, or in other words, how long it takes for a listing to go live on the market to an accepted offer. June sits at 8 days on market, which is the same as May. Annual gains are still good, where June of 2021 showed units being on the market for 12 days. If a seller puts their property for sale at fair market value, buyers should know that the property will not last long. In summary, we are still in a seller's market. This is again supported by low inventory, increasing sales prices, and the low amount of time a property stays on the market. Despite the declining contract activity numbers, we are still above the contract activity levels in February of 2020, a month before the pandemic, where the market was still definitely a seller's market. Despite the seller's market persisting, there are key points I want to highlight going forward. First key point, the trend of declining contract activity is still something to watch, as the decreases are becoming more and more pronounced in both monthly and annual stats. For the first time in about a year, both pending and closing statistics are showing negative gains annually. Gone are the days where annual contract activity showed positive gains in the thousands. In addition, the month-to-month pending and closing figures are still going downward, a trend that started in January of 2022. So why is contract activity taking such a harder toll than ever before? Simply put, I believe it is due to the pool of buyers significantly shrinking in the midst of considerable affordability challenges. Speaking of affordability, that leads us to our key second point, buyer affordability challenges. Why is affordability taking such a barrage of hits? On the buyer side, the fact that interest rates have doubled since last year has evaporated the purchasing power of the buyer more than ever before. Single-digit differences in the buyer's interest rate can increase the monthly mortgage by the hundreds and increase the lifetime payment of the loan by tens of thousands. Combine rising interest rates with low inventory and inflation, and the result you get is buyers being rapidly priced out of the market. Our third key point is the increasing number of homes. Inventory has increased for the first time since November of 2019. As I said before, 177 more properties being on the market will not suddenly fix the low inventory environment we have today. But there is a chance that it marks the beginning of a trend where more properties go on the market. What is your reasoning behind the increasing inventory hypothesis, you may ask? Well, the first reason is that the summer season for real estate is often the time homeowners put their property on the market if they've thought about selling beforehand. August is usually the peak of the year in terms of inventory numbers before declining steadily in the fall and winter months. My second reason is that the Federal Reserve has already suggested that a 0.75% interest rate hike can happen in their July meeting in their efforts to curb inflation. If interest rates continue to go up, the pool of buyers who could afford to buy a property will continue to shrink, giving sellers less people to sell to. Now, this is only focusing on the real estate aspect of an interest rate hike, so it doesn't even include the effect an interest rate hike will have on the economy as a whole. In addition, if the Federal Reserve is looking to curb inflation, that will slow or maybe even reverse the equity gains in real estate since inflation technically increases the value of the properties. Since inflation has been at its highest ever since 1981 at 8.6%, I expect that the Federal Reserve will continue the interest rate hikes for the remainder of 2022. After the July meeting, the Fed will meet in September, November, and December. However, we won't have to wait and see what the Fed will actually do as each meeting comes and goes. Now, these two reasons are why I think inventory will continue to increase monthly as more homeowners put their property on the market before the buyer pool shrinks further and interest rates rise again. Well, that wraps up June's market report. That was certainly a doozy. If there are certain stats you want to know about or want a specific topic covered, please do let me know. If you got any feedback, that is also welcome as well. This is Oscar SanJuan with eXp Realty, signing off.